What is good, YouTube? It's your boy Teflon Don coming back with another video, and you know the vibes, man. Lately I've seen that the candlestick trading Bible has been of much interest to many of the people who have subscribed to the channel and many of the viewers. So I decided let's just continue with it till the end. Gonna be breaking it down into small chapters, hopefully 10 to 50-minute long videos, just so you guys can, keep your concentration. With that being said, let's get straight into the content. All love. So we've got the pinball candlestick pattern strategy. The pinball candlestick is one of the most common Japanese candlesticks. It's why it is widely used by price action traders to determine reversal points in the market. In this section, you're going to learn in detail how to identify potential pinball signals and the conditions needed for higher probability setups. A pinball is a chart candlestick. It's characterized by a very long tail that shows rejection and indicates that the market will move in the opposite direction. The area between the open and close is called the real body, and typically all pinballs have a very small real body and a long shadow, a long tail, a long wick. A bullish pinball is known for its lower wicks, and the bearish one is characterized by the upper wicks. The color of the candlestick is not that important, and bullish candles with wide real bodies are more powerful than candles with real black bodies. On the other hand, a bearish pinball with black real bodies are more important than the ones with white real bodies. So the next is going to show us how the pinball looks, and let's see how that is. So this is the bullish pinball. As you can see, you've got a small body and a long wick. So basically, for us as traders, we're supposed to use our analysis skill just to, determine the psychology behind the candlestick. And basically what I'm seeing from this is that price pushed down all the way to here, which means that at that point in time, sellers were in the market, but they didn't have enough momentum and volume to push price further down, thus inviting buyers into the market and allowing them to push the price back up for it to eventually close here and leave a small micro wick. So basically it just means that sellers were overwhelmed by the buyers, and that's the psychology behind the pinball. So the bearish pinball, same concept, just opposite. The bullish green candle, bearish red candle. So how to identify pinball candlestick setups? So to be honest, quality price action setups don't exist in the market, because you'll see that sometimes you can find a high probability setup and you're going to get very excited about it and you take your trade with confidence. But at the end, you're frustrated because the signal fails for an unknown reason. And that unknown reason is just due to the vast size of the market, meaning that there's so many factors and so many things that you're working against for you to come out profitable or to come out with a win. Meaning that every time you get on the charts, man, accept your losses, maximize your wins. First part, accept the loss. So let me give you an example. If you identify a quality pinball candle near a support key level in an uptrend, this is a powerful buying signal to take. You shouldn't ignore it. But if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, the market will not go in your predicted direction. If the signal fails, it doesn't mean that your analysis is wrong or pinballs don't work. It's just because the market didn't validate your decision. Therefore, accept your loss and look for another opportunity, preferably on a different day. Take one loss, take two losses, done. That's it. Maintain that discipline. Of course, you're not a robot, you're going to make mistakes. But if you're disciplined 95% of the time, you're going to come out successful. So you may ask yourself, why should we look for quality pinball setups if the market doesn't respect them? As you know, trading is a game of probabilities and there's no certainty. This is why you should evaluate your pinball setups from multiple angles. And the fact that you're looking for quality setups means that you're trying to put the probabilities of success in your favor, which is the right mindset of successful traders. Meaning that us as traders, every time you get onto the charts, man, if you put in your maximum effort every single time, eventually you're going to find a winning formula and you'll be able to become profitable much faster. So to determine whether or not a pinball is worth trading, this price action signal should respect the following criteria. 1. The pinball formed in bigger time frames such as the 4-hour or daily time frame should be taken into consideration, because if you look at smaller time frames, you can easily spot a lot of pinball signals. These setups should not be ignored because smaller time frames generate a lot of false signals. Basically, they create a lot of noise and a lot of fake outs, a lot of false moves, and it's gonna just confuse you. So here we've got a chart, and it's basically showing us how the pinball how it would look on the live market. So the pinball formed in line with the direction of the market is more powerful than one which is formed against the trend. If you can identify a clear trend, that means that you know who's in control of the market. The formation of this candlestick pattern with the trend makes it so effective. So as you can see on this chart here, you've got this pinball here, and it clearly is just a confirmation that price is going to continue trending upwards. Even after the pullbacks, it's still trending upwards, because this clearly identifies that sellers, although they are in the market, they're getting overwhelmed. So here we have another chart, and it's just going to give us more examples. So you can see here where a bearish pinball candle formed, but it didn't cause the next candle to open bearish. The next candle continued in the bullish direction of the uptrend market. Same here. On this example, you can see that the pinball formed here, but it still shows that there are buyers in the market due to the fact that it's in an uptrend. So this is one of the pinballs where it can be ignored, and this is one where it's going to be just an added confirmation to your buyers. So as you can see in the chart above, bullish pinballs that were formed in line with the uptrend work, and they should be taken into consideration. But the bearish ones that formed against the trend should be ignored. The anatomy of a pinball is important as well. You have to make sure that the candlestick is a pinball by looking at the distance between the real body and the tail. Pinballs with longer tails are more powerful due to the fact that sellers pushed price down so low and buyers still managed to overwhelm them. The psychology behind the pinball candle formation. Pinballs are formed when prices are rejected. This rejection doesn't indicate a reversal signal, because this price action setup can form everywhere in your chart. The most important areas to watch when trading pinballs are major key levels such as support and resistance, supply and demand zones, and moving averages. The formation of this candlestick chart pattern in these levels give a clear idea about what happens in the market. If the rejection is near a support level, for example, this is an obvious indication that the bulls are more powerful and they are willing to push the market to go upward. So we're going to see the chart below. And as you can see on the chart below, let's just have a small illustration. As you can see, that price managed to close above this resistance, which is very good, meaning bullish confirmation. It's closed above the resistance. And then at this point, it pulled back to retest that key level. And then a pin bar showed, which is a signal that price is about to continue moving in the direction that it was already moving in. So if the formation of this candlestick occurs near a resistance level, it indicates that the bears reject prices and prevent the bulls from breaking this level. So this means that the sellers are willing to push the market down. You see the chart below. This is another example, basically the reverse of what we just saw. And basically price closed below the support, and it came back to retest it, forming a pinball signal, and eventually it continued downwards. So that support became a resistance. This was previously support, it became resistance at this point. So if you understand the psychology behind this price action pattern formation, you'll be able to predict what is likely to happen in the future, and you'll make good trades based on high probability pinball signals. So now trading the pinball candlestick with the trend. If you're a beginner trader, I highly recommend you stick with the trend, because pinballs that occur in trending markets offer good trading opportunities with high risk reward ratios. When you master trading with the trend, you can then move to trade range bound markets or even counter trends. But if you're making money with what you're doing, why change it? Why tinker? Continue doing what you're doing. This strategy is simple. You start by identifying a clear uptrend or downtrend, and you wait for the pinball to occur after a pullback to support or resistance level. So let's see the example below. And as you can see, price closed below support, strong bearish candle. It continued downwards, but as you can see, it was slowly beginning to lose that momentum, that volume. The candle started to get smaller and smaller, and eventually it flipped bullish and it started retracing. But there was now this resistance level that was preventing price from going up. And at some point the buyers came in, they tried to take it up, but they didn't manage, and the candle closed below in a pinball signal, and that was the signal for you to enter the trade, because you've waited, you've executed patience, you waited for the retracement, and now you waited for the candle to form the signal to give you the entry. So the figure below shows how this price action signal works if it's traded with the trend. As you can see, the price was rejected from the resistance level, which indicates that the bears are still in charge of the downtrend. The formation of pinball indicates that the end of the retracement move and the beginning of an impulsive move at the resistance level in line with the downtrend. This is a high quality setup because of the following criteria was respected. The pinball is well formed and it's in line with the direction of the market, which means the pinball is formed. It was a bearish pinball in a bearish market. Regardless of the pullback was just one of those things that occurs on the chart. The rejection occurred in a major key level, which represents a hard point in the market, a resistance level. The risk to reward ratio is good and it's worth taking the trade. And you can see from the example that with this trade, if you took the trade here, you'd have a very, very small stop loss. Sometimes even if the market is trending, we can't draw support and resistance levels because price moves in a certain way which we can't spot static key levels. If you're in a situation like this, you can use the 20-hour moving average, which is a dynamic support in an uptrend market and a dynamic resistance in a downtrend market. So this is the pin bar, and basically it's acting as a resistance. And I guess for someone who uses the moving average, they would take that trade seeing the pin bar form at a resistance level due to the moving average. So as you can see in the chart above, the market is trending down. Using the 20-hour moving averages helps us to identify dynamic resistance levels and high probability pin bar setups. So dynamic resistance levels are basically resistance levels that they're not constant, they're not static, they move. It's constantly changing as the market moves. So is the dynamic resistance, so is the moving average. So it's always adjusting to how the market is, as opposed to support and resistance the way that we normally do it, where it's just one straight line. It doesn't move, it doesn't change. Support is a support, resistance is resistance. So here we have another example, and basically it's just going to show us the opposite in an uptrend where the moving average is acting as a dynamic support. So the 4-hour chart above illustrates how the 20-hour moving average could help us to find key points in the market. When prices approach the moving average, the buying pressure takes place in the market and the price goes up. The pinball signal is clear on the chart because the trend is bullish. The price action is set up as a bullish anatomy as well, and the rejection from the 21 moving average is a confirmation signal to buy the market. And with that being said, that comes to the end of this video, and for whoever's watched till the end, I don't know who you are, maybe I know you, but whoever's watched till the end, all I want to say is, man, this weekend, maybe avoid trading tomorrow. It's a Friday, why take the risk? This weekend, man, just meditate, reflect, and come back on Monday putting in 110% onto the chart. Because I was listening to Rock's FX and he gave me some sound advice, man, and he told me, you're already a great trader, man. It's just that maybe you don't believe in yourself yet. You don't see yourself as that person trading $100,000 account. But you should right now and act like it. Because that's the way that you're going to become profitable. The more you take it seriously, the better you're going to be. So I encourage you all, after this weekend, this weekend, go spend some time away from everyone. Just go meditate and ask yourself what you really want out of this trading and why you're doing it. Is it because you want to continuously lose money, or you only want to trade to a point where you're trading a couple $1,000s? Well, that's not the goal. The goal is to reach millions, hundreds of millions, man, to become one of the greatest traders. And as Only Traders Gang, that's something that each one of us should aspire to, regardless of the color of your skin, where you are in the world, or your financial background. Open your mind up, and I'll tell you, man, you can be anything you want to be, bro. Just open your mind. Your situation, your environment should not affect it. And that's something that you need to implement on the charts, because once you go on the chart and you start reacting, you stop thinking, you stop planning, you stop being calculated, you stop being analytical, because you're just reacting to what is being thrown at you. That's why us as traders, we have to have that inner peace, and know that the environment is not affecting us. We're actually the ones affecting the environment. Even though it's really hard to see, man, just know that if you can change yourself, your trading is going to change. The markets are never going to change. And with that being said, all love, man, all love. Love you guys. Come back with another video. Deuces.